Beyond Apes, tokenization of real-world assets from an L1 perspective will be our last presentation before lunch. Please join me in welcoming Todd Miller, VP of Business Development and Partnerships at ChromaWay, to the stage. Todd uses his experience in both the real estate industry and in strategic technology consulting to develop creative solutions across domains. Here you go.
Thank you. It's nice to be here. I got the perfect spot right before lunch, but I'll try to make this as least painful as possible. I was actually I want to grab the clicker. I was in Barcelona this weekend and did a walking tour, and the tour guide went through Catalonian history from the Romans through Franco to Messi in 10 minutes. So I'm going to try to do that on digital assets with you. So first of all, about ChromaWay, we're the project behind Chromia, which is a L1 blockchain. Right now it's in testnet, but we have a number, we're working as an L2 with EVM chains, and we have several installations around permission chains using our technology. Just like quick story and 4 pictures of ChromaWay and Chromia. We actually are rooted in like the Color Coin protocol. There were a couple of the founders who were from Israel, associated with Technion, were involved with Color Coins. And so some of our technology is actually rooted back around really the first protocol that was really a kind of a pre-NFT asset, anchoring other asset types in the Bitcoin blockchain. Folks may have heard of a project with the Swedish Land Registry. We were focused on using smart contracts and the ledger to anchor title transactions in Sweden. And that's how we developed our technology called Postchain. It's actually, the nodes are actually designed around SQL or any other sort of database, relational database technology. So it's a variant of like key value data stores, which are used in most blockchains. We launched our public chain called Chromia in 2019, very smartly, sort of after the ICO push, but we still have a CHR token, and it's a public chain. And then we made some headlines in 2021 around one of the games that runs on our chain is an L2 and also on Binance Smart Chain called My Neighbor Alice, which has done quite well. It's a very advanced game. If you get a chance, go take a look at it. It's really exciting from a gaming perspective. Again, as I mentioned before, the technology is rooted in relational databases. We think that the concept, first of all, that SQL is one of the most popular database structures in the world, used by enterprises very successfully. We think it's for scalability, for indexing, for many different advantages. Declarative programming language, it's sort of the perfect type of framework to be able to build richer applications on top of. We also have a different view than an EVM. We use side chains. Each app runs on its own sort of subnetwork of nodes. We're Byzantine fault tolerant. Also, we use sharding that's organized by a directory chain, also working on a set of nodes. And then for additional layer security, we can anchor into public chains like Ethereum or Bitcoin. Again, I'm going through this quickly. I would love to talk to folks after in more depth about it. So here's my root of the talk around sort of apes in real assets. I think we kind of went through the ape period. Maybe some folks own them in the room in terms of a Bored Ape or something. But what we're really more interested in, or at least I am, is real world assets. And it's not so much the ape itself, but the building the ape is standing on. And if you look at the two, and we just went through a period around sort of how NFTs became very popular. But when you look at like a real world asset, like a building or even sort of a financial asset, something that's backed by some stream of revenue, it could be a physical asset. You can see the differences between, say, a digital collectible where the blockchain is the registry. In a real world asset, you might, for example, property, you might have a property registry, which is the ultimate ownership source. From ownership perspective, an NFT guides ownership. I think like the previous speaker from AWS talked a lot about this. And we also think like ownership today is marked by, say, a deed or some other ownership contract, but we think that NFTs could play that role. Law is different. I mean, to some degree, digital collectibles have, it's almost like the law hasn't caught up yet with digital collectibles. We think at some point they may be considered a security, and for real-world assets, the law is very important around compliance. We also think the technology can help with that regard. And then value, that's like the biggest thing why I'm sort of interested in this real-world asset is we're still trying to figure out value in the digital world. We're seeing, obviously, significant price drops around digital collectibles, around things that operate in games and so forth. Although real-world assets have value external to that, around location, around functionality, and so forth. So that has to be accounted for differently. Why should this be important to us as an industry? Why is this a valuable area? Well, first of all, like capital supply chains are very inefficient today. There's many intermediaries. If you've ever tried to raise funds, either from capital markets or for real estate and so forth, you know that there's a whole coterie of intermediaries that add cost to the transaction and not necessarily value. We think the blockchain can play a value-added role there. Also, like even today, we think the tokenization kind of significantly extend like fractional investing. It's already an accounting system. Fractional investing already exists. The blockchain is sort of a perfect ledger for that. Importantly, brings greater transparency. We're seeing a whole sort of set of 2.0, I would call them DeFi protocols that provide liquidity to sort of real-world assets. So this is a very exciting dimension. And finally, there is a working legal framework. Even places like Switzerland, Austria, Liechtenstein have introduced the concept of ledger securities as a place to record ownership. And in the US, Reg A and D don't conflict at all with storing ownership on a blockchain. So just to close here, so we are doing protocol integration, and the way we do that is our blockchain is sort of the infrastructure level, but we work with issuance platforms. And so one of our partners in the Netherlands is called Blockhouse. They issue today conventional securities around property or could be CO2 reduction projects. But what we've done, instead of issuing a share, say on a certificate, and so forth, we can record that transaction on a blockchain as an NFT. We can also whitelist investors who've passed KYC and AML so they can hold the NFT in their wallet. They can trade it like on an alternative trading platform, peer-to-peer today. They also, the question around custody, many investors aren't yet comfortable with maybe holding the assets, so we could self-custody. Again, the goal would be that they custody themselves, but in this interim, we're comfortable with that. And again, on this project, we're acting as a layer 2 until our platform is public. Again, this is an example, a Belgian project around real estate. Behind here is Blockhouse, which is the issuance platform. This is sort of private labeled. And then behind that is all the transactions here recorded on a ledger and then issued to wallets and so forth. Still challenges in the space. I just want to name a couple. I mean, first of all, for issuers, if you're like a real estate fund or you're another kind of financial fund, you may have concern about risk associated with digital assets today. Unfortunately, the FTX collapse and other collapses have sort of muddied the waters a little bit for issuers. So we need to make them comfortable with both with the technology and also the fact that these digital assets are maybe different than more speculative cryptocurrencies. From a Also from an issuer perspective, there's this whole notion of why they should be open to embracing both transparency and decentralization. They're kind of new concepts to them, but both could bring many more investors into their worlds and open it up more for a democratization for finance and so forth. From an investor perspective, on the crypto side, we want to get crypto investors comfortable with higher quality, but potentially lower yield and less volatile products. So crypto investors who have been used to, just have a minute here, crypto investors have been used to high yields from DeFi protocols, may be more comfortable with a somewhat lower yield, but much more higher quality investment. And then getting investors who are more conventional comfortable with like wallets and self-custody and so forth. So those are just some of the issues. Anyway, just a brief overview. Happy to talk to you. We have an ecosystem fund. We like to invest in projects that are working in this tokenization space and other space. Love to talk to you more about it and get your reaction to some of these ideas. Thank you very much.